What's up, traders? Matt from the Trade Brigade here, and boy, do I have a good one for you on today's session. This is, of course, the weekend crypto report, and as always, I will be doing a technical analysis of the coins that you see listed up above. But at the top of the show today, I do have a rant scheduled for you, so you're going to want to hear this. And then also at the end, we're going to sandwich our analysis here today. I've got a special announcement for you, and what I'll do is I'll link that, or not really link, but I'll make that a YouTube chapter in the timeline down below, so you can cut to the chase if you want to skip through some of the rant or analysis here that we're about to go through. So let's dive into the rant first. Why am I kind of fired up on today's session about the crypto landscape? Now that we've seen a really significant quote-unquote crash from these recent highs to these recent lows, we experienced the same sort of instability with the Luna debacle back here. I think it's worth talking about reasonable expectations for the crypto landscape. There's too many people out there who are saying that crypto is going back to 100K per Bitcoin, and then on the flip side of the coin, too many people are saying this is going to zero, it's not worth anything. So let's sort of dive into this a little bit, and I'm going to give you my thoughts, and again, I just want to act as a voice of reason here and not say things that are too outlandish, and just, again, manage your expectations. If you can manage your expectations in any investment, you're going to be served quite well. So here we go. Off the highs, we're down about 70%. There's no arguing with that. That is a hard fact, okay? So is Bitcoin, quote unquote, on sale here at the lows? No, absolutely not, because we don't know what the value of a Bitcoin is. I'll get into value in just a moment here, but I also want to illustrate the risk like this. If you potentially buy into Bitcoin thinking that it is on sale, notice that we're hanging out around $20,000 per coin. If prices were to just drop another $10,000 per coin, what's another $10,000 in the grand scheme, right? Think about it like this. You've now just cut your investment in half with an even lower move in terms of net price movement, right? $10,000, it's already moved off of 60K down to 20K, but if it just goes another 10K and your entry is at 20K, you just cut yourself in half. So there's still a lot of risk here inside of Bitcoin. Please don't forget about the risk. Some people only look at upside, some people only look at downside. Let's talk about the downside first, have reasonable expectations, then we'll talk about and consider the upside. So I was talking about value just a second ago. What gives Bitcoin value? All right, if you walk down the street and ask someone, what's the value of Bitcoin? And I'm not talking about $20,600 per coin. I'm talking about what's the value of the technology behind the blockchain actually worth? You know, at the end of the day, is this going to be worth $50,000 per coin, $100,000 per coin, $250,000 per coin? Again, if you walk down the street and ask the right people, I'm sure you'll get a mixed bag of responses. Some people will still say they don't even know what Bitcoin is. Some people will say that it should be worth nothing. It's just imaginary made-up currency, right? You're going to get answers all across the board. And that ties directly into value, what the actual value of this is, because currently we're missing the two things that give anything value. So here we go. We talked about this when we were talking about the Luna debacle a couple of weeks ago. There's two things. Number one, let's stick with the same example we used a couple of weeks ago. Why is it that Apple, the company, has value? Why is it that its shares trade at roughly $150? It's slightly less now, but per share. Why is it the case that Apple has value? Well, number one, they create physical goods. I'm using a Mac computer to interface with markets, to record this video, to talk to you guys through YouTube. There's demand for the product. They make something physical, tangible in the real world that people desire. They also have cash on their balance sheet. They also own real estate where their offices are. So they have hard assets as well, not just their intellectual property and the products they make. They have other things that are valuable, as assets within the company. So that's number one that gives something value. Number two, that gives something value. Let's look at the US dollar. Now you might be saying, well, the US dollar, geez, that thing, it lost the gold standard a while ago. And you're absolutely right. So this is not tied to a physical asset anymore. And we've clearly experienced that with the unlimited printing that the Fed has been doing. That's a different conversation, obviously. But why is it that the US dollar still has value behind it? Because as Americans, we still agree that if we walk into the grocery store, we can pay with dollars to buy our chicken, to buy our ground beef, vegetables, apples, whatever it is that you get at the grocery store, you can pay for it with US dollars. So therefore, it has some value. Let's tie both of these things now to Bitcoin. Is Bitcoin ever going to be backed by a physical, tangible asset? Probably not. That defeats the whole purpose of decentralization, right? The idea that no one governing body can take control of this thing, right? If it's tied to one asset, a physical asset, then maybe some country out there tries to take control of that, whether or not it's land or a physical commodity like gold or silver or whatever. So that's no good. That's not going to fly. That would lead to a centralized system eventually over time, right? So we're probably not going to get scenario number 1 up here. Scenario number 2 means that we need widespread adoption and utility. I can't walk into my local grocery store and pay for my apples, bananas, chicken, and milk with Bitcoin. I can't do it yet. Maybe you can do it in some places, but it's the exception, not the rule. So there's not widespread utility or widespread adoption for cryptocurrency currently. Think about it like this too. If I were to walk down to my local gift store, can I pay for it in Bitcoin? Absolutely not. So this is certainly far from being adopted by the masses. Therefore, it's pretty tough to have any utility behind it, aka we do not have a scenario number 2 on our hands either. That leaves us with only one thing. Bitcoin and the cryptocurrency marketplace is entirely speculative. The idea that maybe one day it will eventually have mass adoption and utility, that could be a possibility. And don't get me wrong, this rant is not to say that Bitcoin is going to zero, that it will never achieve utility. That's not the purpose of this rant. The purpose of the rant is to say that at this current point in time, I do not think that this is a generational wealth buying opportunity, because we are clearly in a downtrend and crypto remains to be one of the more speculative asset classes out there. It does not have one of these two things going for it to tie it to a hard number at, some value at the end of the day that we can look and calculate and say, okay, here we go. Bitcoin is technically should technically be worth, I don't know, let's say $10,000 per coin, $100,000 per coin, whatever the number may be. We don't have that in place yet. Okay, so because of that, we need to understand that crypto is a very speculative marketplace, and it's been that way for forever. I think the first thing that we need to realize is if we're investors, we should be sizing our positions for zero. I've been talking about this for the past, I don't know how many recordings we've done here on crypto. My strategy is and will always be to dollar cost average into the two big coins, Bitcoin and Ethereum, a reasonable amount of money every month, whereas if it went to zero, my financial future would not be impacted. I think about it like this. It's an extra dinner that I went out to buy, and I think of it as lost money. Sure, you could say that, I value the experience of going out to dinner, but for me, I value the possibility that maybe in the future, this does gain some utility, and maybe it does go 100x, and I'll have some small exposure to it. But if it goes to zero, my financial future is not dependent on that, and it's no harm, it's no foul. That's the investor's perspective. The trader's perspective is to take advantage of trends. The first time that we really experienced Bitcoin was following the greater fool theory, just the idea that someone out there is willing to pay more than you did for it, is really right here on our first lower high and then breakdown of these lower lows. I really think that this was a defining moment. The euphoric nature of the coin sort of died out, and all of a sudden we lost buyers. No one was willing to step up and say, you know what, I'm still willing to buy the coin at 56, 58, up around the $60,000 mark, right? It wasn't the case. The buyers evaporated. The greater fool disappeared. Instead, the people who were buying here on the pullback turned into the greater fool, and now they're underwater. So I'm not saying, again, that crypto goes to zero. I'm also not saying it goes to 100K, but I think you need to be reasonable about your expectations here and still be aware of the risks to the downside. It's a great segue to get directly into our technical analysis now. What is the current trend? It's obviously down. With this most recent breakdown here, which we sort of forecasted based on Ethereum being the leading indicator, we're putting in bear flag consolidation, right? Big move lower, now consolidating dead on the lows. We did not experience a massive snapback, so it's not like this was a fake breakdown. We are getting price acceptance at these lows, bearish indication. If we take out the Fibonacci's to, again, keep this very objective here, I'm not speaking in terms of opinion, this is hard fact, we're underneath the 38.2. Now, this is slight opinion, but in my estimation, anything that remains in consolidation underneath the 38.2 is obviously building out a bear flag, right? And as we would expect, that pattern typically pans out to the downside, especially when we are in a downtrend with highs, lower highs, lower highs, lower highs, lower lows, lower lows, lower lows. The trend is clearly down, okay? So could this turn into a monumental bottom? It could, but there's nothing yet in place that would have me changing my investment strategy. If for some reason this starts to bounce and we get a double bottom, a higher low, and then we get a higher high, maybe there's reason to say, okay, something could be changing here. We can start trading this more aggressively to the upside. If for some reason in a year or 2 or 5 or whatever, we now have more utility, more widespread adoption of Bitcoin, maybe it's worth changing the investment strategy from saying, okay, we're only going to put in what we expect to go to zero, to saying, all right, let's take a little bit more of a serious approach here and allocate more of our capital to this asset class, which has proven itself to have some sort of value. But until that's the case, I will maintain the stance that I just promoted in the past little rant there. So that's Bitcoin from a technical perspective. Again, the only reason to get involved to the long side, in my estimation, is if we can break the trend line and put in some sort of higher low. That's where maybe the things start to shift back to the upside. But currently, bear flag consolidation here. Our next support underneath is at $16,250 per coin. And after that, there's, let's see what we have for support from in the past. I would venture to bet it's probably headed closer to $12,500 per coin. All right. So again, we're talking about almost a 50% loss if this is your first initial entry, and we do continue on the downward trajectory into some of these lower targets that we've mapped out, right? So that's Bitcoin in a nutshell. Next up, we've got Ethereum. Remember that this was acting as a leading indicator here. Remember, it did not remain sideways in its consolidation. It broke down first, and it led the charge to the downside on this most recent push. Because of that, I would continue to monitor this as the sort of leading indicator. So if this starts to break down from its bear flag, but Bitcoin does not, obviously you don't want to go long Bitcoin, right? You don't want to go long there. You actually probably should be expecting a breakdown and it to follow suit with what Ethereum has done. If we take a peek again objectively through the lens of Fibonacci's from the highs down to the lows, this too is well underneath its 38.2. Starting to get a little bit more subjective, but I would classify that as bearish consolidation. I think it would be hard to say anything else, but objectively, it's under the 38.2. Subjectively, I would classify that as bearish consolidation. There you go. That's my opinion, but you cannot argue with the fact that it is underneath the 38.2, which is a significant retracement, right? So that's what we've got there. Again, to get bullish on Ethereum, it's got to take out the highs. Let me rewind here a second. I sort of breezed over this in Bitcoin. But look at the daily buy setup that was technically in place on the Wednesday session. A hammer candle prints, and we technically take out the high of that hammer on the Thursday session. Why was there no follow through here? Because no one is willing to step up as a buyer inside of Bitcoin in this speculative environment. If there was value here and people understood that Bitcoin technology or blockchain technology is technically worth $35,000 per coin, I'm sure some more buyers would have stepped up on this push lower. It simply was not the case. And again, you can currently see we're actually pushing back down into the lows. So back over to Ethereum, the same thing will hold true from a structural standpoint with the hammer that printed on the Wednesday session. To the downside, breaking down underneath 1,000 gets us closer to $682 per coin. If I just quickly scrunch up the chart and show you where that's coming from, it was a prior breakout point right here. If I zoom in, you will also note it was a retested breakout point. So if we just quickly think about it like this, there's resistance, break, retest, and then go. We have not tested it since this first interaction right here, which is why it is our first significant target to the downside inside of Ethereum. Upside targets, I would look for resistance at any of these horizontal lines that we have mapped out for us. That's going to be firstly at 1300, 1500, and then the back test, of course, of this 1692 will be the most important test of them all, if this is going to have any significant upward thrust. But again, based on the current look and structure of the chart, it's currently not the case. Next up, we've got Binance Coin. What's going on in Binance Coin? Obviously a little bit smaller. It's not the big three, but still a pretty important coin in terms of the amount of liquidity that trades through it. Bear flag consolidation right above this prior low. That strikes me as weak. You don't like to see meaningful bottoms being put in like this. Instead, I would watch for this to break down, repair the low. Ideally, the target here would be down into 146 even. That is coming from prior support. Again, I'll show you that by scrunching up the chart. Prior resistance, it was not retested as a support, so that would be a good first touch potentially buy for a quick scalp. Don't get me wrong, that's a scalp only. I'm not recommending that you buy here for a long-term long. Scalp only. Zooming back in, but again, bear flag consolidation. If we take out the fibs just to stay congruent today, you'll notice that this too is rejecting and underneath its 38.2 consolidation. No reason to get bullish on this until it forms a higher low above this consolidation. That number is 234.30. Continuing along, Cardano, what's going on here? More of a sideways range. This one certainly has not been feeling the wrath, so to speak, like some of our other coins. This is really getting a little ugly down here. It's kind of distracting. Let's clean it up. There we go. Here's the more appropriate balance area. You can see that we're playing ping pong in this range, and we are underneath the 50% mark of the range. Because we're in the bear section, I would be favoring breakdowns. Again, this is not how you like to see a bottom being put in. So a breakdown of 44 cents should take us closer to 27 cents. Again, not to insult anyone's intelligence, but that's a pretty significant loss, even though we're so far off of the highs. This is not quote unquote on sale. Okay. To the upside, the only reason to get bullish would be a break and retest for a higher low above the midpoint of the range and taking out the resistance trend line. That's the aggressive long, just for a quick scalp into the top end of the range. The more conservative long would be waiting for a break of the top of the balance way up here at 65 cents, and then the higher low to form somewhere above that. As a quick reminder, I would let you know and remind you exactly what a reminder is, that this trend line is coming in from the all-time high. Okay, so a really significant trend line here acting as resistance inside of Cardano. That's what we've got. Let's move along and talk about Solana. Last but not least on our lineup, we've just removed all of the coins that are following suit here until the crypto market turns or we start to identify a significant bottoming pattern. Then we'll throw those coins back on the list, but these 5 should cut it for now. Solana, current look is obviously a breakdown of the descending triangle, break, retest, and already resisting on the back test of 37 strikes me as bearish. Again, no reason to be thinking about longs here until we break, retest, and higher low above that 37. And if we were to just consolidate down here, that strikes me as bearish acceptance underneath that flush point. The next breakdown comes underneath 26.27 to get us to 20 even, and then 11.50 if we scrunch up the chart and illustrate where those are coming from. Really important historic level of support in here around that 2076 that we pointed out. It was a quadruple bottom here. That descending triangle, did not break down. Instead, it broke out. And then after that, this shelf of support there around 1156. Again, I think just based on the speculative nature of the market right now, the fact that no one is really willing to put their neck out there and become the first one to buy the new lows, essentially, it's not worth putting your neck out there. You don't need to be the first one in to capture generational wealth. So let me quickly recap the entire video on the Bitcoin Bitcoin chart, and just discuss a couple of things. Could this reverse and move back higher? Yes, it absolutely could. Markets can always do whatever they want, but for the better entry, the more risk-friendly entry, a couple things need to happen. Either a structural change needs to happen, and the change would be a new uptrend, or we need to have widespread adoption of Bitcoin and crypto in general and utility behind the coin. If that happens, yeah, we should change our tone. But currently, based on the speculative nature of the market, these are my thoughts. We're in a downtrend. We should be favoring continuation to the downside. There is no one yet willing to step up and put their neck out there on the line and be the first one up on the chopping block to try to catch some sort of bottom. Okay, that's all I've got for you in today's video. I did say that there would be an announcement here, and there is. If you are interested in a t-shirt, we are going to create t-shirts for the 25,000 subscriber mark. We have a live and active poll running in the Discord. You can go ahead and check that out if you're not a member. It is linked down below in the description of this video, and it's completely free. The shirts will not be free. Don't get me confused there. But the Discord joining is free, so you can go vote if you're interested in voting on a particular size that you want us to carry and the particular quantity that we should carry of that size, and then B, the design. So I'll pop up on the screen right now a couple of designs that we're considering. Again, votes will only be accepted for design preference in the Discord. If you comment down below, that's fine. I appreciate the comment, but I am going to favor the responses of Discord members only, and we will go based on those poll results. The other thing is that we do have this set up as a YouTube poll. If you head on over to the channel, so just go to Trade Brigade's channel here, and you go to the community tab, you'll notice right here, I've got a setup poll just asking if you're interested or not in a shirt, right? That's fine if you're not interested. I'm not saying you have to be interested in the shirt, but I need to know how many to order, right? That way we can satisfy the demand, not over order, so on and so forth. So that's the special announcement. That's all I've got for you on today's session. If you enjoyed the video or learned anything new, if you appreciated the rant, let me know down below in the comments section or by giving the video a thumbs up. Don't forget that the weekly watch list video will be scheduled as normal. The equities market will be closed on Monday in observance of Juneteenth. And with that being said, enjoy the long weekend.